Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at the main theme of this video, and that is, are we coming to the end of the 4-year cycle in light of what's going on in the geopolitical situation out there? We'll also be having a look at some of the companies and their intentions of buying Bitcoins in the future. And as many people have requested in the past, we'll have a look at a couple of the Brexit indicators to see exactly where they are and where they're heading over the next 4 to 6 months. And as per usual, we'll have a look at the 60-day cycle as well as the dollar and the gold charts. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm going to start off with exactly what the situation is currently, i.e. the geopolitical situation as it's unfolding, and I wanted to have a look at exactly what's happened in the past to give us some sort of an idea, some insight or a clue as to what may possibly happen in the coming days and weeks. And as we know, the initial reaction has been negative in the market, but this is usually the case. But what we want to know is what happens going forward in the next few weeks and months. The chart on your screen are courtesy of Invest Answers, so a shout out to Invest Answers for the charts. So this is the market reaction to invasions and wars in the past. Going back to 1964, the Vietnam invasion, and the white lines here are the points of the invasions. And look what's happened to the charts after that. And the inevitable conclusion was to buy the invasion. So you can see the chart going up. Similarly, in 1991, the Gulf War, the conclusion was to buy the invasion. October 2001, conclusion, buy the invasion. The Iraq War 2003, buy the invasion. 2014, Crimean War, by the invasion. Ukraine 2022, once again by the invasion. Obviously, we were in the middle of a bear market as well. So there you have it. For those people who get emotionally tied to what's happening on the geopolitical front, we just need to step back and have a look at exactly the historical perspective of what these geopolitical situations mean. And generally, the overwhelming outcome has always been, so far, for big moves to come. So looking at that chart, what we can assume is that we have a continuation of a bull market despite what's happening in the big bad world out there. And we can take heart from the fact that there are a lot of companies out there who are intending to buy more Bitcoins as part of their Bitcoin treasury. And you can see that from this particular chart that I've made. And this is just the tip of the iceberg, because many companies haven't revealed what their intentions are, but they are making plans to be buying Bitcoin for their treasury. So I've taken some of these companies and the intentions that they've revealed already in terms of the amounts of Bitcoins they want to buy. And of course, we know about strategy. They already have 582,000 Bitcoins, but they're also committing another 20 billion in the future. So that could be in the next few weeks and next few months. And we have Metaplanet, the Japanese version of MicroStrategy, and they already hold 8,888. But they've also committed over $5 billion going forward. And you can see with other companies, some of them I haven't even heard of. So some of these are not even the main companies. So some of the bigger companies who will be making a commitment, who are making plans to commit more funds to buying Bitcoin for their treasury, we will get to know them in due course. But at the moment, we have this K-Wave Media, Semler Scientific, Blockchain Group, etc., etc. And the interesting one here is the Trump Media, because somebody who's got their fingers on the button of the power-making mechanism who can move the markets, well, he's committed $2.3 billion going forward. So altogether, just on this small group of companies here, we've got future commitments to buy $32.8 billion worth of Bitcoins going forward. So despite what's going on out there in the world, despite the negativity, the toxic nature of certain things that are going on, when we look at the facts of what's really happening on the ground, we can look forward to a very good 4 to 6 months coming up. And what I mean by other companies is that we've got this story here that Anthony Pompliano is set to head $750 million worth of Bitcoin investment vehicle. So what he's going to be is going to become the CEO of ProCap BTC, which is a new investment vehicle aiming to acquire large amounts of Bitcoin. And another one that we have here is a UK gold mining company called Bluebird, and they want to convert their gold revenues, so it's a gold mining company, and the revenues they get from that, they want to convert them into Bitcoin. So you can see there's increasing numbers of companies getting involved with Bitcoin and wanting to have a piece of the action. So all this should really underpin any future demand. So what we can expect with all these companies getting involved, that the demand for Bitcoin is certainly going to be outweighing any selling pressure. So once again, we can conclude that at least towards the end of this year, we should be seeing a rally going forward. And this brings me nicely to one of the Brexit indicators. I do get many members asking me to cover the Brexit indicators on a more regular basis. So if we have a look at one of those Brexit indicators, because if we know that there's a lot of demand going forward and there is a much higher probability of getting a blow off top, what we can do is to have a look at exactly where we are and where the Brexit indicators are telling us where the price may well go to. And if we have a look at the top cap here, where the blue line is actually weaving at the tops of the peaks that we've had previously with the Bitcoin price. The only ones that we didn't get was in 2021, where we missed the blue line. And currently, that blue line is at, as you can see in that box, it's 518,000. Now, it doesn't mean it's going to go to 518,000 as we witnessed here in 2021. But you can see where it is currently at around the 100,000. So there's a long way to go. It could be 200, 300, 400. It could be anywhere there. But certainly, as you can see with the 2021, we moved very strongly towards the blue line and we're nowhere near that at the moment. So we can expect much higher prices according to this particular Brexit indicator. And there was a story recently regarding 30 Bitcoin price top indicators hinting at a 230,000 bull market peak. And some of these indicators are also our Brexit indicators. So if you look down here, of all the 30 indicators, there are about 7 or 8 of them are the ones that we're covering here. So unless we have a blow off top, we're not really going to be getting these triggered. And that's why the 230,000 seems to be where the trigger level is going to be for most of these indicators. Now, something interesting I want to show you with one of these Brexit indicators, the main one being obviously the pi cycle. And what this pi cycle has done is to actually cross over. So this happened in 2013, 2017, and even in 2021. But as we know, the prominence of those crosses between the green line and the red line, those crosses are becoming less and less prominent. So this time around, it may not be that the green line crosses above the red line. It may fall short. So we've just got to be aware of that. However, if we are even going to get close to that, just by looking at the trajectories of these two lines can tell us that there's a certain price above which the Bitcoin price should have to go in order for them to come even close. So for those people who want to know the actual settings here, this is the inputs. This is the 350 simple moving average, which is the red line, and the 111 simple moving average, which is the green line. And this is the style that I've got down here. So what we really need for these two lines to start converging is for the price to start moving much higher in the coming months. And what that allows is for the green line, the faster moving simple average, this will start turning very, very quickly. And so this should be starting to rise as the price rises. And of course, the slower moving average, its trajectory won't be as steep as the 111 one. So wherever they cross or come close to crossing, that will be where the end of the bull market is supposed to be based on the historical context. Now, something very interesting which many people haven't picked up, and that is that look at where the red line is currently. The red line is at 166,000. So if we're going to have a blow off top and for the green line to at least come close to crossing over the red line, then that move in the price will certainly move the red line to much greater levels up here. So you can say with certainty that if we are going to get a blow off top, then it has to be very much past the 200 level. So just by looking at the pi cycle, it's giving us a figure beyond the 200,000. Otherwise, the green line isn't going to get much closer to the red line. So let's see what happens. It's always good to analyze the charts, which gives us a ballpark figure of where the price for Bitcoin is heading. So to answer the question for the main theme of this video, have we come to the end of the 4-year cycle? Well, the charts and the information I've presented would suggest that we still have 4 to 6 months to go as per the usual 4-year cycle. We're expecting it to end at the end of this year, and obviously we'll keep an eye on the 4-year cycle as the price develops towards the end of this year. Okay, I'm going to move on to looking at Bitcoin through the various time frames and to try and make head or tail about what's going on currently and what may be following in the coming weeks and months. We're going to start off with the monthly time frame, and the first thing always to look at is the 8 EMA, the 8 exponential moving average on the monthly chart, because once the price falls below that at this stage of the 4-year cycle, that would be a strong signal that we may have come to the end of the bull market. So let's just take a check of that to make sure we're still above that. And here it is. This is the blue line, the 8 EMA on the monthly time frame. And as I've shown you many times, if you've been watching my videos, is that historically at this stage of the bull market, i.e. the last 6 months, when the price closes below the 8 EMA on the monthly time frame, that is a very good signal that we've come to the end of the bull market. Obviously, during the 4-year cycle, it does fall below it, but once we get to the final year of the bull market, or the last 6 months especially, what you see is a very strong support of this line. So we need to just keep our eye on there, and we can see quite clearly that we're well above that price, and the price at the 8 EMA at the moment is around about 93. So as long as we don't close below 93,000, we've very much got the green light to go further up. The only thing of concern here is the RSI. So what we've really got here is a higher high on the price but a lower high on the RSI. So we've got bearish divergence, which seems to have played out here, but currently we've also got another bearish divergence, and that is that the price went up from 109 to 112, so we made a higher high on the price, but here on the RSI it didn't match up. So what we've got is a lower high on the RSI. So currently this would suggest that we've got downward pressure. However, we are in the final stages of the bull market where you would expect the price to go up, and if that is the case, that should increase the RSI line to above the previous high and invalidate the current bearish divergence. So this is what I would expect going forward. And if you look at the pattern here, we have a solid red candle on the left hand side, an indecision candle in the middle, and a solid green candle on the other side. That is what we call a morning star pattern. This is a bullish pattern at the bottom of a trend, which should provide a lot of fuel for the price to go to much higher levels. These are similar patterns to what we got here, and this led to this happening. Then we got another one here, which led to this happening. So we've now got another one here, which is very strong fuel for the price to go to much higher levels. And here's the confirmation of this pattern. A morning star is a visual pattern consisting of 3 candlesticks that are interpreted as bullish signs by technical analysts. A morning star forms following a downward trend, which we got there, and it indicates the start of an upward climb. So what we should see from a technical point of view is for another green candle up here for the month of June. And that gives us a very good clue that we may well be going above the 112,000 in the month of June. And we'll have a look at the 60-day cycle to see whether that's going to be possible. A slightly worrying sign when we move on to the weekly time frame here, and that is that 2 weeks ago, we printed this dragonfly doji candle. This is an incredibly powerful bullish signal at the bottom of a trend on a high time frame like the weekly, and this would have suggested that we were going to go to much higher levels. However, the geopolitical situation put paid to that last week. So what we closed last night, on Sunday night, is more or less of an indecision candle. But as you can see with the long wick at the top, this is more of a bearish signal. However, because this is not right at the top of the trend, it is after a fall in the price, and it also follows a very bullish signal. And if you look at the prices where they ended up, they've ended up very similar to the last 2 weeks. So they're around about the 105,000. So at the moment, I would suggest that this dragonfly doji candle is still in play. But sometimes, as we know, when you get a dragonfly doji candle at the bottom of a trend, the next candle may go all the way down and retest and run down on the wick of that candle. And we seem to have just gone about halfway down at that level. So as long as we don't close below the wick of that dragonfly doji candle, we're still good to go to the upside. And on the weekly time frame, it's always important to have a look at 3 simple moving averages. And that is the 8 simple moving average, the blue line, the 21 simple moving average, the yellow line, and the 50 simple moving average, the white line. Because on this time frame, they provide very important information. So if I zoom out a little bit, as soon as we get above the 8 EMA, the blue line, this really starts the ball rolling for the upward movement in the price. And as soon as we fall below the 8 EMA, and the 8 EMA crosses the yellow line, i.e. the 21 simple moving average, then we're usually in for a period of consolidation or a pullback. And it usually means that we find support on the 50 simple moving average here. This has happened twice now. Here firstly in September last year, and just recently at the beginning of April. But now what we've got is that the price has got back above the 8 EMA and the blue line has crossed back above the 21 simple moving average. So the trajectory here on the weekly time frame would suggest much higher prices. And we can see quite clearly the price is finding very strong support on the blue line. And if we look at the daily time frame through the lens of the 60-day cycle, we bottomed out here on the 5th of June, so just over a week ago. And currently, with today being Monday, the 16th of June, we're on day 11 of the current 60-day cycle. And certainly what we've had in the last few days with the geopolitical situation developing, we've had an evening star pattern. So the evening star pattern is the reverse of the morning star pattern. So what you've got is a green candle on the left hand side, an indecision candle here, which is the hangman candle, and you've got a solid red candle on the other side. So this is an evening star pattern, and it actually plays out to the downside, which is obviously what we've got. But what's developed so far is that on the Friday, when the price did actually have a jolt and came all the way down to the 102,800, as you can see, we've left a wick at the bottom, and this is what we call a hammer candle or a dragonfly doji candle, whatever you want to call it. But what the meaning is that this is a strong buy up of the lower prices here. So this is a very strong bullish candle, which should actually play to the upside. So what we've now got, unless we have some other serious developments going on in the world, what we should really get in the absence of that, with around 19 to 20 days to go for the end of the first half of the 60-day cycle. So this is the midpoint, the white line. This is the end of the current cycle, which is going to be at the beginning of August. So what we do have is that we've got a nice run into the midpoint. So for the next 10 to 15 days, we should get a nice run up before we get a midpoint correction. So this is a good opportunity for the price to get above the 112,000. And if it does do that, then we should come back in the midpoint correction to find the 112 as a support. And that would be incredibly bullish, because then you've got the rest of the second half of the 60-day cycle. Bitcoin will have a free run to go to much higher levels. So this is what would be a very good development. If we can find support on the 112 at the midpoint, which is going to be the first week of July, if we can find some support having broken above it, then that's what you would expect in the second half. If we can't get above the 112 and we're just going to go sideways until then, even that would be quite bullish. Then at least we can retest the 112 at that point and have another chance to go to much higher levels. And as I've shown you before, when you use the Fibonacci retracement from the previous all-time high at 69,000 down to the 15,400 at the end of the bear market, we can have a look at the next level where Bitcoin should be heading once we get past 112. So far, we came all the way up to the 1.272, around 104,000. So we obviously found very strong rejection and resistance here. But the next level is this one here, the 1.414 at 128,000. So this is the next level. So once we get above the 112, this is the next level of resistance and possible pullback. So that would be something to just look out for if we do break above the 112 in the coming days and weeks. And if we look at the dollar, as we've been mentioning over the last many weeks and months as well, the trajectory for the dollar is actually to the downside, and this should allow the wider markets to perform much better. So the dollar is providing us a very good encouragement for the markets to go to much higher levels over the coming months. So currently the dollar is at around about 97.9, and we should find some support here with possibly a counter trend rally just like this one and this one, before the continuation of a downward trajectory, creating the lower highs. So we should still continue to see the lower highs on the way for the next few months. Now, moving on to gold, on the monthly time frame, what we're getting is a very strong move for gold. Instead of coming back and having a pullback around these current levels, when we last had a look at it on the weekly time frame, we were expecting some sort of a pullback here. However, with the world situation going on, those are the types of situations where gold would flourish. And this is exactly what's happening at the moment, because when we have a look on the weekly time frame, this is what I highlighted at the time, this gravestone doji candle, that this has the power at the top of a trend to bring the price down to much lower levels. However, it didn't come down very far at all. You would have expected with this type of a candle to come back down to the previous low, which would have been around here. However, with the situations developing around the world, the strength of gold seems to be showing its hand here. And instead of falling much further lower, what we're really getting is a lot more strength. This would be convincing once we get above the top of that wick, because sometimes when you do get these gravestone doji candles, you do have a run up on the wick of those candles before being rejected. So many seasoned investors may see this an opportunity to actually sell into strength if there are no more geopolitical situations causing negativity in the markets. Okay, so I'm going to leave it there. If this is the kind of analysis that you like and you want more of this analysis, I do cover 2 extra videos per week, once on a Wednesday and once at the weekend, where we look at the Bitcoin miners as well as Bitcoin. And this kind of analysis we cover on a daily basis at the end of each trading session, Monday to Friday. If you want to join us on the private member section for a market update Monday to Friday at the end of each trading session, to give you a summary of exactly what's going on, especially with the last 5-6 months coming up, it's very important to be kept up to date with all the information that's going on around Bitcoin. And in the private member section, we also cover the Bitcoin miners. So when you go into the membership section, you'll see all the private members videos covering Bitcoin and the miners, as well as these market updates and any other information and charts that are important to keep abreast of everything that's going on. And really, information is key, so you can get a flavor of the kinds of things we cover. This is the last market update that we did on Friday, and it's quite a comprehensive summary of what's happening in the trading sessions. And also in the private member section, we follow our trading portfolio where we invest in the Bitcoin miners. Of course, you don't have to do that, but there is an option to do so if you wanted to do that. It's something that we started with $100,000 at the beginning of 2023, and currently that's gone up to $429,806. Our original target of 5 million seems quite distant at the moment, but we know with the Bitcoin miners, they can have a multi-fold increase within a few months, like we did in 2023, where some of the miners went up by 12x within the period of 6 months. So we're following our target, whether we get to 1 million, 2 million, 3 million, or even 5 million, whatever it is, we're closely following the trading portfolio between now and the end of the bull market, which we're expecting to be at the end of this year. So if you want to join us in the private member section, and if you think that the cost of 1 coffee per week is worth all that information with the market updates and 2 extra videos per week, then all you have to do is go below any of my videos, and you can see that there is a join button below the videos, as well as in the description box. There's a membership link here with a red button, and the cost is only £12.99 per month, which comes to the cost of 1 coffee per week for all that information. So what we have is a growing band of members joining up as we're coming to the critical last 6 months of the bull market. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.